What's up? What's up? What's up? My mind, your money business folks. It's me yet again with another video. And as you can see by the title, it's about the new 2025 tax brackets. While this has nothing to do with investing or stocks, but it does affect your money. And it does come into play when you're thinking about your budget for next year, which is right around the corner, and your dollar cost averaging in, and just trying to figure out how much you're going to invest. But either way, I found it to be interesting and good information to put out to you guys. This came out September 30th, where I found it online, of 2024. And it says the IRS will soon set its new 2025 tax brackets. Here's what to expect. So let's get into it. Some Americans could see lower federal income taxes in 2025 due to an annual bracket adjustment by the IRS. That's good, right? On the downside, oh damn, this relief could be more modest than over the past 2 years. The IRS typically announces its new tax brackets each fall, but experts are already forecasting next year's adjustments by crunching the same inflation data the tax agency uses in its annual resets. So this is only what you should expect. When the new numbers come out, they may or may not be the same. Okay, tax brackets and other provisions are likely to be adjusted higher by 2.8% for the 2025 tax year, according to Bloomberg Tax and Financial Information Services provided Wolters Kluwer, whoever they are, which both published their forecast earlier this month. So earlier in September is when they published this information. Okay, that would mark the smallest inflation adjustment in the last 3 years, following a 5.4% increase in 2024 and a 7.1% boost in 2025. The smaller projected adjustment for 2025 comes amid rapidly cooling inflation, especially with the Fed's reducing interest rates on September 18th, which dropped to a 3-year low in August after touching a 40-year high in 2022. So why adjusting tax brackets matter? Yes, why? You ask? Let me tell you. According to the article, it says adjusting the nation's tax bracket for inflation helps individuals avoid so-called bracket creep. Never heard of that before, but now I do, or now I am. Or when workers are pushed into higher tax bands due to the impact of cost of living adjustments to offset inflation without a change in their standard of living. That's why it's very important to live below your means, people. Just because you make the money doesn't mean that every dollar has to go towards a bill. Invest in yourselves. Invest your money to make money for you. That's the way the current system is set up. It's set up that way. It's set up that way for a reason. And we're not educated on this for a reason. But now you know. I mean, it's not good. It's not bad. It just is what it is. If you pick up on it and you decide to participate and create, a solid foundation for yourself or more, the better. If you don't, then if you're happy with where you're at, then so be it. Or you could do what a lot of people do, try to take short routes, and that always ends not in a good way. Not in a good place. Okay, so back to the article. It says the IRS adjusts a host of tax elements each year for inflation. Jackson Hewitt, an expert, Chief Tax Information Officer Mark Stieber told CBS Market Watch. Otherwise, as people march through life, because that's what most people are doing, they're marching through life, not paying attention, and get raises for inflation, they could get pushed into a higher tax bracket. That is true. Yeah, and that would undercut any benefit from that raise. The IRS annual inflation adjustments are based on what's known as the Chained Consumer Price Index, something that affects the stock market. And this is required by the Tax Cuts and Jobs Act. I never heard of this, but I am hearing about it now. So it's something that I'm going to look into. Wolters Kluwer told, Kluwer, yeah, however you pronounce his name. Unlike the primary CPI, Consumer Price Index data familiar to consumers, most of us consumers aren't even aware of the Consumer Price Index, but Google it. Okay, chain CPI more accurately reflects trends in monthly spending. They're tracking what you're spending your money on, people. They're tracking this for a reason. Things are being marketed to you for a reason. Millions and millions of dollars are spent on marketing things to you. But that's another topic for discussion that I may or may not talk about one day. Okay, either way, this is according to Brookings Institute. These are experts. I'm not an expert. I'm not a financial advisor. I'm not an expert. I'm just a simple person on YouTube that's talking about things pertaining to the stock market, stocks. And now I'm reading about the new 2025 tax bracket that you guys can Google online the same as I did and find the same information. Okay, both Wolters Kluwer and Bloomberg Tax, these are the experts talking, not me. I'm just reading their words. They said, not me. Their forecasts are based on recent chained CPI data. New thresholds for each tax bracket. Next year's tax bracket rates will remain the same, but there's always a but. The cutoffs for each band of taxation will rise based on the inflation adjustments, because inflation went up. Okay, so the adjustments went up. Okay, the individual tax rates will remain 10%, 12%, 22%, 24%, 32%, 35%, and 37% as set by the 2017 TCJA, which stands for Tax Cuts and Jobs Act. The stuff you learn when you actually start paying attention. Okay, the upshot. You have to earn more income next year to reach each higher band of taxation. For instance, a single taxpayer who earns $48,000 in 2025 will have a top marginal tax rate of 12%. Damn, that's nice. Okay, whereas in 2024, the top marginal tax rate stands at 22%. Oh, wow. Damn. So it also gives how single filers' tax brackets may change in 2025. Okay, the IRS adjusts individual tax brackets each year to account for inflation. Here's the impact for single filers. So let's go over it quickly, shall we? Okay, in 2024, 10% was taxed on any income from $0 to $11,600. In 2025, it has been raised to $11,925. Okay, in 2024, single tax failure brackets for 12% was $11,601 to $47,150. 2025 12% tax bracket is $11,926 to $48,475. 22% tax bracket is now, I'm just going to read 2025 because that's all that matters, because 2024, this is what's being projected for 2025. So 2025 22% tax bracket is $48,476 to $103,350. Okay, 24% tax bracket is from $103,351 to $197,300. That's not bad. 32% tax bracket is $197,301 to $250,525. Not bad. 35% tax bracket in 2025 is estimated to be $250,526 to $626,350. And the 37% tax bracket for 2025 is estimated to be around $626,351. Okay, taxation in the U.S. is progressive, which means the tax rates increase the more you earn. That is true. Live below your means, people. Just because you're making a lot of money doesn't mean that you need to spend it. Learn how to play this game. Mind your money business, people. Mind your business. Stop paying attention to certain things. Yeah, okay. But some people misunderstand how tax brackets work, believing incorrectly that their top rate is what they'll pay on all of their income, which is not true. Instead, the brackets represent the percentage you'll pay in taxes on each portion of your income. But that is true. Get yourself a CPA, someone who specializes in taxes. You can have them do your taxes. They can help you in so many different ways. I found the CPA last year. Great. You let them do your taxes. You provide them all the information. Any questions from the IRS? Talk to my CPA. But I've never had a problem. I file all of my paperwork. No issues, right? But either way, for instance, married taxpayers who file jointly, you married folks, and earn more than $23,850, the top threshold for the 10% bracket. Damn. You got some couples? Okay. Either way, will likely pay $2,385 in federal income taxes, or 10% of their first $23,850 in earnings, and then 12% on any income above the amount up to $96,950. That's not bad for. Damn, that's good. That's not bad. I never really looked at the couple's tax bracket before. It's better than singles. You tax more because you're single, people. Either way, how married couples' tax brackets are likely to change in 2025. Tax experts are forecasting that the IRS income tax brackets will rise 2.8%. I said that already, next year, helping people avoid so-called bracket creep. Here's how married couples who file jointly, you're two, but you're one, are likely to see their tax brackets change next year. In 2025, 10%, we already talked about it, is up to $23,850. The 12% tax bracket for joint filers is from $23,841 to $95,950. That's nice. 22% tax bracket is $96,951 to $206,700. That's really good. Okay, 24% tax bracket. Then this thing, you have kids, you have child care, you have so many write-offs with kids. Maybe I should have some more. Okay, 24% tax bracket, $206,701 to $394,600. That's nice. 32% tax bracket is $394,601 to $501,050. 35% tax bracket is $501,051 to $751,600. I wonder, how do they come up with these percentages? 37% tax bracket for joint filers is $751,601 and up. It's interesting how they come up with these numbers. You can do good with these numbers. Again, if you live below your means. But if you're out there living your best life, not so much. Okay, standard deduction for 2025. Other tax provisions for the 2025 tax year will also likely increase by, I already read that. Oh, that was it. Or did I read that? No, I didn't. It's just stating something that I read already. Okay. The standard deduction next year is projected to increase to $30,000 for married couples filing jointly, up to $29,200 in current tax year. Oh, that's for standard deductions. Oh, my bad. My bad. I'm sorry. Okay, the standard deduction for single taxpayers is forecasted to rise to $15,000, up from $14,600 in 2024. Walters Kluwer said. That guy. Kluwer. Yeah. Okay, head of household filers will see the standard deduction increase to $22,500 from $21,900. That's nice. While those who are married but file separately will see an increase to $15,000 versus $14,600 in 2024. So, how to use the new tax bracket info? Glad you asked. Okay, although the new tax bracket thresholds won't go into effect until January 2025, it can be useful to know the new parameters now for tax planning purposes. See, that's what I said. Jack Stewart-Stevers notes. And I used to, okay, yeah. So the expert says you can start planning. And that's exactly what I said at the beginning of this video. He also recommends completing a year-end tax tune-up to ensure you paid enough to the IRS during the current tax year. Yeah, and your CPA can help you with that. Your CPA can help you fine-tune your taxes, people. They can tell you, hey, you need to start paying more in federal so you don't have to pay, anything at the end of the year or less at the end of the year, so on and so forth. They can tell you how much money you need to spend if you own a business. They can tell you, a lot of info. So get one. They're worth it. They are truly, truly worth it. Okay. And, okay, he also recommends, like he said, recommend doing an end of the year tune-up. Okay, that can help avoid an unpleasant surprise come April 15th, he added. That is true. Because I remember having someone in Virginia do my taxes. Dang, what was that? So when I went to go sign my tax papers, she said, okay, so how do you want to do this? And I was like, do what? Because I had a big tax bill. And she was like, well, do you want to make payments or do you want to pay this all in lump sum? She said, I suggest you do payments. But either way, you can avoid that by planning ahead. And when you have a CPA, you pay them a nice, you pay them a good amount of money, to do your taxes for you. So they charge you accordingly because of the work that they do and the extra forms they may have to fill out based upon your situation. Whether you have stocks, you have rental properties, those require different things. Either way, they're worth having. So get with one if you need one. Okay, next take a look at the projected inflation adjustments for 2025, as well as your expected income next year. Like, will your income go up? Like for federal employees, we know what our pay will look like the next year based upon the raises that we receive or the step levels that we may increase to. So it's easy for federal employees to project those numbers. And I'm thinking, well, if it's easy for me, it's easy for anyone. I said me. If it's easy for federal employees, well, I'm a federal employee. Yeah, I am. But either way, I think you understand what I'm saying. Just start doing the projections, people. Okay, because it says that can allow you to check if you might need to adjust your withholdings, for instance, or plan to save more in your 401k or IRA plan. Because your CPA will tell you, like, hey, you need to invest more. Hey, you need to max out your 401k plan, or you need to put more into your IRA, or you need to create a SEP IRA and put X amount of dollars into your account based on the income that you're making. Hey, you need to spend more money on your business, because if you don't spend it on your business, you're going to have to pay it to Uncle Sam, the tax collector. Okay, with these inflationary projections, you can take a swipe at next year, Stieber said, the Jackson Hewitt guy. Yeah, and that's it, people. That's it. I thought I had more, but that's it. Yeah, that's good info. Plan ahead. Like, I've already created a spreadsheet for my 2025 budget for next year. It's like I have an estimate on how much money I'm going to make from my job, the expected income from my rental properties, my veterans income, because I am retired from the military. So yeah, I've already started doing that. I suggest you do the same. If you haven't done it, do it, people. It's hard to do new things. I will say that. Just like doing these videos, like sometimes I think maybe I shouldn't do it, but then I tell myself to do it. It's hard. It's hard. It's hard doing something new, especially if you feel the need to do it. And you had a feeling to create a budget for a reason. That feeling and that thought popped into your mind for a reason. And it's going to be hard, especially if you've never done one. You weren't raised in a family that talked about one. You don't hang around people that created one or converse about it, So it's hard. So it's like you have to train your mind to just know that the thought popped into your mind for a reason. And you have to stick with it, because it wouldn't have popped into your head if it's not something that you need to do. Especially if it's for the betterment of your life and your family situation. But anything new is hard to conquer and obtain, because you have to fight through the old programming. That's what I would call it. Because our programming, if we're in a place where we're not happy, it's because of our conditioning, and it's because of the old programming, the old software that we have been running in our lives. And now it's time for an upgrade, because that software probably has ran its course. And if you're wondering why you're not getting out of life what you need, it's because you're still running on that old software program. And it's now time for you to upgrade. And you just haven't figured out what that upgrade looks like. Or you have figured it out and you just don't want to put in the work, because you believe the change in order to get what you feel as though you need is too hard to obtain. It's harder. It's something that can't be obtained. I hope I make sense, because right now I don't know. So what I'm going to do is end this video. I'm going to end this video and get off of here and relax. Watch an episode of my little show, The Ring of Power, on Amazon. I think the last episode came out today. I'm not sure. If not, I'm just going to chill, do a little meditation, visualization, think happy thoughts. Grateful. I'm grateful. I'm blessed. Protection. I'm protected. You are. I don't know why I'm saying all that. Thank you. All right, you guys take care. Peace.